Or it sounds like we're now
Sorry,
starting
setting
to.
up.
Okay.
Lawrence McDonald is live.
Okay. Thanks, Jose. Everyone, thank you so much for joining us. Uh, we're really thrilled. Our book, When Markets Speak, has been at the top on Amazon in the financial categories. And the entire thesis of the book is playing out, which most of it, not all of it, I'd say like 60-70% of the thesis is playing out. And a lot of it has to do with the 2024 election. Both candidates have moved into the protectionist category. Both policies of both candidates are very inflationary. Paul Tudor Jones today essentially laid out the thesis from the book When Markets Speak on CNBC. And this is one of the most prolific, most successful hedge fund managers in the history of asset management, laid out a lot of the things that are in our book that we'll get into today a little bit. But Robert Ben Battenberg was one of the key architects of our book, How to Listen When Markets Speak. And Rob, I want to thank you again for everything you did. You were at our kickoff event in New York in the first quarter. We had a great event at the Harvard Club. And it's really a wonderful book that connects the Lehman trade to now. The fiscal and monetary response to Lehman Brothers, the failure, was about $4 trillion. And the fiscal and monetary response to COVID plus the regional banking crisis for last year was about 16 trillion. And essentially, the Biden team, and we saw this with Bush in 2008, and these administrations will do whatever they can to stay in office. Bush in 2008 wanted to really protect McCain's possibility or probability for election. It's the same thing now. We've done close to $2 trillion of deficit spending into the election. It's embarrassed every economist on the street. It's embarrassed a lot of people, including me. It's just an incredible amount of fiscal largesse into the election to try to get us through that kind of runway past the election. But Rob's going to get into the different election trades. We've laid this out to our clients. We work with hedge funds, pension funds, family offices, wealth managers around the country in our live chats on Discord and on Bloomberg. And Jose, let's just go to the first chart. One of the things that clients have been pointing out to us over the last several months is you have to understand the downside of private prisons, right? GEO. And this goes through a number of reports, but institutional clients have been telling us that there's potentially 150% upside in GEO equity if Trump wins, but a lot of downside if Kamala Harris wins. So I want to emphasize that. So you don't want to just look at the polls, right? The average person just looks at the polls. You want to look at the polls. Robert's been doing a lot of work on the betting sites. You want to look at early voting, and you want to look at the trades. So what we look for is, okay, what trade has the most downside if, say, Kamala Harris wins? And one of them is GEO equity, because it's private prisons, for the love of God, right? And what stock has the most upside in a Trump victory? I mean, think of the ICE overload if they're trying to round up immigrants and migrants around the United States. So private prisons, GEO equity has tremendous upside, but also tremendous downside. So you want to see, okay, what's happening with the polls, what's happening with the betting sites, and also where is real capital moving? At the same time, the solar names, which have been a victim of higher rates, we got to say that. But at the end of the day, the solar names would be a big benefit if Kamala Harris wins. Not so much under Trump. It could win either way in the case of First Solar, companies like that. But at the end of the day, the solar trade in a Democratic regime, as we saw with Biden and Obama, these were huge election trades in 2008 and 2020. So the solar names are moving down at the same time. The private prisons, Fannie and Freddie, a lot of the Trump trades are moving up. So it's not just the polls, it's the polls, the betting sites, and the trades are all kind of going the same way. Next slide, Jose. And then here, once again, Stan Druckenmiller talked about this last week. You don't see every day the regional banks go above the top Bollinger Band, right? That's what happened recently in the last 5 days. So the regional banks have been pricing in some type of deregulatory regime. That's a very big move. It's a FOMO move, fear of missing out. And once again, Druckenmiller, who really doesn't like Trump much at all, Stan, and we respect him. He's one of the greatest hedge fund managers of all time. He's mentioning, okay, the regional banks, they're performing really well because they're pricing in some type of deregulatory regime under Trump. So once again, this is another indication of which way the election to go. Next one. And then there's like Texas Capital Bank. This is a classic example of one of the best regional banks in the country. As you can see there in 2016, parabolic move on the Trump win. Once again, deregulation, any type of Republican administration with a strong deregulation bent or kind of agenda. You're going to see the banks, especially the regional banks, do very, very well. And it's just interesting here. If you look at the weekly RSI, relative strength, the daily RSI, it's not a very common spot. You're talking about a very high percentage above the 200-day moving average, and a lot of, once again, fear of moving out, money coming in. Next slide, Jose. So Rob, let's get into a conversation. When you laid out this report 3 weeks ago, and you were talking about geo and all these different trades, what are you looking at? Like, what are you looking at right now? You've been focused on the early voting.
Yeah, well, I mean, look, let's start from the top. There are four scenarios how this election is going to can play out, which is either Trump wins with a sweep, meaning that he controls both houses of Congress or both chambers of Congress after the election. He can win with a divided Congress. Harris can win with a sweep, or Harris can win with a divided Congress. And the market is pricing in something in between Trump with a divided Congress to Trump with a sweep right now. Um,
And
so the
when you say
upside,
the market's pricing that in other words, you're talking about across all the channels. I mean,
well, I mean, more or less, there are different assets priced this in a different way. But for example, we see it with the dollar. The dollar has been strengthening, even though Trump and his minions talk about, yeah, they want a weaker dollar to improve U.S. competitive advantage. The dollar loves Trump. It's been going up simultaneous with Trump odds. So that's very obvious there. The thing is that if Trump wins with a sweep, the outcome could be really different than when he wins with a divided Congress.
so you're
Because
talking
if
about a
you
Trump sweep versus divided Congress. And when you're talking to institutional clients, there's two different trades there. That's what you're trying to say.
there's two different trades there, because Trump winning with Congress flipping a Republican means that he has the runway to embark on his tax policies, which is really a priority of him. So deregulation as well as tax policies. So he would devote a lot of political capital in the first year on extending the Tax Cuts and Jobs Act of 2017, which
I'm sorry, you
means
cut out
things
there. Which act?
the Tax Cut Act of 2017. It's called
Okay.
the TCJA, Tax Cuts and Jobs Act. So that's basically making permanent some of the deductions, child tax credit, higher estate tax exemptions, and adding some other tax benefits to that as well, fully restoring the state and local tax, those type of things, but also lowering the corporate tax. That requires a lot of political capital. If he
So
wins
wait
both,
a minute. So what the average person doesn't understand is the Biden team is just, doing $2 trillion, 1.8 to $2 trillion deficits every year. And now we're going to have a big tax cut regime.
well, these are just extensions of the existing tax cuts. So that is already priced into the current deficit, right? So the 2 trillion
Okay.
deficit that Biden was running, Trump wants to extend that. Harris doesn't want to extend all of it. He wants to only extend part of it. So Trump wants to extend that. But the key here is that he's going to use a lot of political capital in the first year to spend time of extending it. If he doesn't win Congress, he doesn't have any fiscal runway all right, because he has a adversarial Congress, right, who's not going to give any fiscal bills that, the Republican bills. So he will devote all his time on the trade war.
So this
So
is
that's really a different outcome.
yeah. So what I want to point out, because what we do at the Bear Trap Support is we talk to we work with institutional investors around the world, and what we do is we carry and track the conversations. And what Robert is picked up on is that there's a number of investors that we respect that we've known for 10, 15 years that are all talking about the same thing. If Trump or Harris does not have uh, the House and Senate, or especially the House, then that divided government leads to potential fiscal cliff for January. And that's where you got a big situation. All that means is if you're doing $2 trillion deficits and say Harris wins and she doesn't have the House and the Senate, all of a sudden the Republicans try to become Tea Party people again. And then you've got the debt ceiling that rolls over. Remember that Kevin McCarthy debt ceiling, Rob? That was, I think it was about a year and a half ago, and now that's going to expire in January, and then that sets up the debt ceiling.
Yeah, they'll probably push it out to March. Yeah, in a divided Congress, of course, with the Republicans controlling either houses, it's very likely the Republicans are going to control the Senate. Any senator
Are going to
basically
control.
sits there for 6 years, so
Yeah,
not every Senate seat is up for re-election.
so it's very likely that they are going to have control of the Senate.
They are. The Republicans are
Yeah.
going to have control of the Senate. So even if Harris wins, and she flips the House, she's very unlikely to have to win the Senate as well. So she's faced with a divided Congress.
And that's because of the layout of the elections, like the amount of
Right.
Democrats versus Republicans.
Like all the gray states do not have senators there up for re-election. So the map is very favorable for Republicans this year. So what we're looking at today, based on the predictions and the polls, is that the Republicans will have at least 51 seats. They could have more if they win a state like I don't know, Arizona or something like that. But for now, that's where it is.
So Rob, let me tell you. So when I talk to institutional clients, talk to hedge funds, mutual funds, the one thing they say is 51 seats is not really control of the Senate, because Kamala Harris in a new administration is going to be able to flip at least one or two or three of them. So
not on important, if Harris wants to raise the capital gains tax or impose some of her onerous taxes, like raising corporate taxes to 28%. There's no Republican, not even Mitt Romney or Mikowski, who are going to go. Mitt Romney's not running anymore. They're not going to go with that. Yeah, if she has innocuous legislation, there will be some Republicans that will sign on for it, but not legislation that will completely overhaul the tax code. We saw that, by the way, it's same with Trump. There were some senators on the Democratic side who were pseudo-Trump aficionados.
well, we saw John McCain killed Trump's healthcare plan.
Right.
Democrat.
But like a guy like Joe Manchin, who was halfway aligned with Trump, but he would never vote. He'd never voted for the tax cuts in 2017. And then, of course, you have some affections on the Democratic side, too. If Harris tries to push through a very radical legislation, very centrist Democrats who are not going to go with her. So that you give up control of the Senate, then you're dealing with a divided Congress. So you basically are limited to very, very limited fiscal legislation. And that has a big outcome. The worst outcome for the market is if Harris wins with a sweep. Because then she will be able, or the risk is the markets will fear, and this is what clients are worried about too, that she will raise corporate taxes. She will impose a capital gains tax on unrealized capital gains and stuff like that. So that's the market.
Now
doesn't
walk
like
us
that
through
at
this.
all.
Is this a Goldman chart? Is predicted on the prediction market implied odds of control?
Right. Yes. So this is for the Democrats, 63% controlling the House, and the Republicans 71% controlling the Senate. Those odds have probably changed now. It really also depends on who your sources are. But I think this is reasonable. If Trump wins with a large enough margin, he'll be able to carry the House with him. But let's not forget that the Republicans have a razor-thin margin in the House already. So even if he wins the House, he may actually lose a seat here or there. Joe Biden in 2022, he also won both chambers of Congress, but he lost seats in the House, which gave him a much narrower majority there.
So Rob, one of the things that people are talking about is like ahead of the 2016 election, stocks were down 4% into it from the summer, down 4. This is the S&P. The S&P was flat for 18 months into the 2016 election, and then down 4% in the months ahead. And then for the Russell went up from that moment of the 2016 election. The Russell went up about 50%. And the point is today, equities are up almost 48% year over year into the election. So it's almost like psychologically, people are like conditioned from, it's almost like recency bias. People look back, okay, 2016 Trump, seems like a lot of people are front running this and they're buying stocks. Like I said, stocks are up 46% year over year into the election, whereas they were down 4% into 2016. It feels like people are front running the market a little bit relative because they're just trying to gain the 2016 experience, which means some people in the chat that I respect think that you could get the opposite this time because even if Trump wins, the market's priced in a Trump win.
I mean, it's possible. We have seen markets rally into elections before. We've seen it in 1996. We've seen it in 2004, where elections basically have a predictable outcome, where the market likes the outcome, and regardless of who wins, they're willing to throw caution to the wind and rally into the election. It doesn't happen that often. But let's not forget.
So the bottom line is, if you're an investor watching us right now, and Kamala Harris wins, divided government or a big win, but especially divided government, you want to be cautious because when you're doing $2 trillion deficits, and there's a divided government, and you saw with jobs this year, a lot of the jobs are government jobs, right? And so a good percentage of the job growth over the last 12 months has been government jobs. And if you're going to take that $2 trillion deficit, 1.8, 1.9 down, debt back to $1 trillion, that's a fiscal cliff. And then so if you want to be careful on election night, what the results are. It's not just who wins, it's about who wins with control of Congress.
Yeah, I think that's a very important part of the outcome. Yes.
And walk us through, Rob. You've done a lot of you've done such an incredible job in our book, When Markets Speak. But you created this chart. This is all of this data. And what's amazing is everything that you a lot of the points that you put in the book, Paul Tudor Jones, famous investors are talking about right now. But we wrote the book almost a year and a half, 2 years ago. But one of the things that you've been talking about, and we've been talking about to our clients, is this front end loading of T-bills. And I can't emphasize enough, if Janet Yellen, and this is so important, if she had issued, let's just say you want to borrow $2 trillion, if she had issued those in longer dated bonds, like 10-year bonds, those bonds would have been moving like this, especially this year with the tensions in the Middle East and oil prices. So think of $2 trillion. If she had issued longer term bonds, they would have been moving like this in the market, and it would have created a lot of volatility in an election year. But what did she do? She brilliantly front end loaded here. So she's moved a lot of that $2 trillion was now in T-bills. And guess what? T-bills mature in less than 1 year. So no matter what happens with oil or interest rates or the Middle East, they don't move. So she sucked volatility out of the market. The next Treasury Secretary has to basically extend some of these maturities. Rob, get into this potential Liz Truss moment for the first quarter, because that's what clients are talking about more and more and more in our Bloomberg chat with the professional investors.
Well, the one reason why she has been, and she's not the only one, by the way, one reason why the Treasury Secretary loves issuing short-term papers is because the short-term paper is driving money out of the RP. And driving money out of the RP basically boosts liquidity. That you're not going to have that with longer dated treasuries.
And how
The
does that
RP is
work? How does it help? How does it help liquidity?
so the RP is a facility that was put in motion after the financial crisis of 2008, but it was particularly utilized in 2021 when the Fed was mopping up excess liquidity. So they were mopping up excess liquidity and taking some liquidity out of the system because they've been basically overrunning, drowning the markets in liquidity. So that facility filled up by around $2.4 trillion. And Janet Yellen has been using that facility to refinance the debt, to issuing short-term bills. The RP facility is essentially a facility that access liquidity
So explain
is.
that. So it's the money market fund
It's
demand for T-bills.
money markets are putting their money in there and they're getting paid by the Fed, but it's not part of liquidity. So if money moves from the RP back into the bills market, it is basically money coming out of, away from liquidity, non-liquidity into liquidity, into the liquidity pool. So it's a boost for liquidity because these money market funds, instead of getting paid by the Fed, now they're buying bills, and those bills are being put on the balance sheet of the commercial banks, and that's considered cash. So the amount of cash at the commercial banks expands. So they have more excess liquidity, which is one of the reasons why this market has done so well, because she's been driving the $2.5 trillion out of the RP and into the bills market, thereby supporting and increasing the excess liquidity in the market.
But
Now that facility is almost empty.
yeah.
So the clients are speculating once she's running it completely down, which is probably by the end of the year, are we going to go back to quantitative easing?
Now, Rob, think about this. If your average weighted coupon, and it's 35 trillion of debt, just keep it simple. If your average weighted coupon, now you wrote this 5 months ago, it was 2.3%. The average weighted coupon. Now that's probably 2.6% now. But because all these, as you wrote here, 15 trillions rolling over 2024 to 26, because you get 15 trillion rolling over and you're at 2.6% average weighted coupon, that means if they keep interest rates here, then your average weighted coupon is going to go up toward 3.25, and your interest on the debt is going to go from, say, $1 trillion a year to maybe 1.5 trillion. And so isn't this the Liz Truss moment that is sitting out there in the first quarter?
Yeah, it's already one of the biggest line items on the budget. Like Janet Yellen quietly on Friday night, which is extremely unusual. The Fed never does, the Treasury Department never does that. Gave us the budget for September and for the fiscal year because the fiscal year ended that's with September. So they came, she published that on a Friday night, and it showed about $1.9 trillion deficit and more than $800 billion of net interest expenses for the federal government. It's an unheard of number. You're spending more money on interest than we're spending on defense right now. And that's probably going to go up because of this very reason. You know, the Fed is constantly rolling over debt, maturing debt that was issued when rates were at 2.5%. Now they're going to have to pay 5.5%. So the debt, just to surface the debt, we're not even talking paying back debt. Well, the United States will never pay back its debt. Forget it. Just to surface the debt, that line item will probably go to something like $1.3 trillion next year, and it's going to eat away at discretionary spending. So this is a big challenge for the government.
So this is why silver, gold, this hard asset trade is starting to work. And Paul Tudor Jones today said that commodities are grossly undervalued. But if the Fed gets forced into supporting the bond market, that's forced into it because there's so much issuance in the next 6 months, then all of a sudden that gets you a big move into hard assets. You can see the move in silver here, the breakout. We've stayed long silver the last year and a half, almost 3 years now. Recently buying, but what's going on in terms of in terms of the move into gold and silver. What is the move in gold and silver telling us about the confidence in Washington?
Well, it's also that money supply has increased so much since the summer. Global money supply (M2) is increased by more than $4 trillion, while it states essentially since 2021 has this more or less stayed level. I mean, there was a big dip in 2022 when the Fed mopped up excess liquidity, but then they boosted it again in 2023. So we're basically stayed around 99 trillion. And now suddenly, since the summer, it's been going up by 104 trillion. And I'm only counting the big economies like China, the United States, Japan, Eurozone, the UK, all that stuff. So that money supply has been driving Bitcoin higher. It's been driving silver and gold higher, driving stocks higher. You see a massive reflation trade in basically all financial assets.
Yes.
And the US government needs liquidity, right? They need liquidity to refinance this debt. The dollar is still the reserve currencies. We argued that that is under siege right now, but so far that liquidity is being basically pushed into the US Treasury market. They need so much liquidity in order to finance this insane debt that they're raking up, and this spending largesse, which is equivalent to 6.5% of GDP in an economy that is running at 5%, 6% nominal growth.
Right. And so when you're at home right now, you got to think of how big the pool is. So gold's $16.5 trillion pool. That's a very liquid pool. Gold's biggest drawdown in the last 10 years is only 22% because it's got a huge liquidity pool. Silver is only a 1.5, $1.6 trillion market, has less liquidity. One thing we're looking at now is palladium. Palladium's only a $300 billion market. So think of 16.5 trillion gold, 1.6 trillion of silver, and only 300 billion of palladium. So palladium, platinum are a lot smaller. We're starting to see institutional funds move into the smaller metals because at this part of the cycle, that's typically a trade that works, especially with a reckless Washington. At the same time, like you said, Bitcoin, what is it, a $1.6 trillion market, Rob? But then the actual liquidity in terms of the liquid Bitcoins, it's smaller. So you just got to be careful, but you got to just remember how small the Bitcoin market is, how small, relative to gold, relative to the NASDAQ 100. There's 23 trillion bucks in the NASDAQ 100. And so Bitcoin, silver, gold, platinum, palladium. And as you can see here, it's an important chart. So if you think of how far above the 200-day moving average, you see these super spikes in silver in 2011, 2020. We're right now only 21% above the 200-day moving average. In a big bull market in silver, your moves have been 33, 65, and 75. You can see there in the chart. And this is even more spectacular for Bitcoin, right? It's even less so for gold. But it's an indication that you're at the early innings of something very, very big. And we've seen clients in our chat buying upside in silver over the last couple of months, buying upside in gold, buying upside in silver. It's a lot cheaper than the NVIDIA calls, for example. One of the clients made this point like a month and a half ago. He's buying out of the money upside calls in GLD for much cheaper than NVIDIA. And gold's been kicking NVIDIA's butt the last 3-4 months, by the way. So I think NVIDIA is a little bit up since June or whatever is the high there. But so in terms of measuring volatility and upside, in terms of the election, some of these trades are a lot cheaper than buying upside in the market, even though because the commodity market there's nobody trafficking in them. Next chart, Jose. Rob, so get into the steepener for a sec. So you see there in 2016, we had a pretty, sharp steepener when Trump was elected. And now here we've got the steepener again. The steepener trade has worked over the last 6 months, and then we had a flattening, and now we're seeing a steepening again.
Well, yeah, but there's two types of steepening, which is you have the bear and the bull steepening. So bull steepening is when the rates market, when treasuries rally. yields go down, but the yields at the front end go down faster than the yields at the back end, which is usually a sign of a recession. So in the beginning of the
So let
steepening
me,
in
so you get twos and
2024.
tens, so you get twos and tens yield, if people worried about a recession, twos rip lower, so the curve steepens, and tens come down, but not by as much. That's what you're trying to say, right?
Correct. And so the beginning of the steepening in 2024 was really driven by a recession fear. This summer, there was this angst suddenly coming into the market that we were going into a recession. There was a soft jobs report. Defensive stocks started suddenly outperforming, and everybody ran into the treasury market.
Yeah, what
And
did
you had a
utilities have the best, utilities had the best third quarter they've ever had?
Yeah, utilities too benefited, which is essentially a masked treasury trade. It's a reach for yield. And then with the added advantages, utilities suddenly have a growth story behind it because of the power demand growth from data centers. So, but lately we've moved out of that bull steepening and we moved into a bear steepening, whereby treasuries go down, but the sell off at the long end is much stronger than at the short in the front and then the short end, and that could be driven by and I think the bear steepening started when the Fed started cutting rates. Some market participants believe that they were overshooting and that they basically have, sparked a new growth cycle. And then you get your bear steepening. When
Now,
Trump
so
got
the bear
elected in
steepening
2016.
is, the bear steepening is much more like 1970s, 80s, where, so just to make it very simple, so 2-year treasury yield, 10-year treasury yield, all of a sudden people have less confidence, and Paul Tudor Jones, Stan Druckenmiller have both been bearish on the long end. So if you think about the yield on the 2-year treasury versus the tens, if those tens are going up in yield, and you're steepening because the long end is going up in yield and lower in bond price, that is by definition the bear steepener, correct?
Right. Yeah. Well, you saw that when Trump won in 2016. You saw because the market was pricing in more growth. Now the market is slowly pricing in more growth. And maybe they're pricing in a Trump victory already in the bond market, but that's what the bear steepener has become. So you flip from a bull steepener, which is recession, into a bear steepener, which is
So,
growth. So
so
you've
Rob,
gone from two
yeah,
extremes inside of one quarter. It's kind of I'm not sure the media really understand what's happening here
well,
because it's
that's my
quite
point,
unique.
Rob, is that, everybody's looking at these idiotic polls. What you want to look at is look at the polls, look at the betting sites, look at the Trump trades, and then look at the curve. And they're all saying the same thing. Forget about whether you like Trump or not. But who cares? Like, bad guy, good guy. All I could tell you is factually, the curve, the Trump trades, the betting sites, and the polls are all kind of saying the same thing. So, maybe people don't want to look at that, but that's the fact. So now you get into the electoral college.
Yes. So the road through the White House now leads through Michigan, because based on no toss-ups, right, of the Electoral College map, if we can go back to the map.
Yeah, go back to that
And
map.
then we see that basically you're looking at 262 electoral college votes for Trump, 261 for Harris. Whoever wins Michigan then wins the election, although it's going to be really, really narrow. So that's why Trump has been stumping in Detroit last week and the week before. And he knows how important that is. The additional challenge that both candidates have is that all the candidates that are running in this election, including Cornel West, Jill Stein, and the Libertarians, what have you not, they're all on the ballot there.
So all the candidates and the controversial ones are on the ballot in Michigan, but that's not the case in some of the other states.
Yeah, some of the other states, the main parties have basically tried to legislate them off the ballot. That's not the case in Michigan. So we can go into the minutia of what's in play in Michigan, but there are a lot of dissatisfied voters who may vote for third party candidates there. So it's not a shoe in. It's not a layup. So we want to watch particularly that one. Of course, Pennsylvania is also important, right? If you look at the way these polls close on election night, you get like the early states that are coming in. Florida is of course very important. Pennsylvania is of course very, very important. How much is Harris going to win Pennsylvania? And Virginia, we've seen Virginia in the early vote there. We see that the districts which are heavily leaning Republican have a higher turnout right now than the Democratic districts. Those are the
Say that
districts
again.
around.
There's a higher turnout in some of the Republican districts relative to
Yeah,
Democrats.
so very few states report actually by whether you're a registered Republican or a Democrat. So, if you don't have that, then you have to look at what the turnout is per district. So if you have a district like where Loudoun County is, which is very close to Washington, D.C. and Virginia, which is heavily Democratic, and you see that the turnout is lower than right now in the early vote and the votes that have been mailed in than some of the Republican districts where you have a lot less of a lot less population, but much more people have already sent in their ballot or went in early voting. You see that difference, then wait, here's an enthusiasm gap where Republicans are so eager to go either early voting or send in their ballots, whereas some of the Democratic districts are showing that they're lagging. Then you see, okay, enthusiasm is very important with elections because that determines turnout. We've seen the same with North Carolina. Normally, Democratic turnout is much higher than the Republican turnout, and or in the early vote, and
Oh,
there
so,
they
so
do.
let's go through that. So in North Carolina, even with that horrible storms, the turnout is higher.
No, so North Carolina does report breakdowns between Republican and Democratic and independent voters in the early vote. So you can see that normally in a normal election, Democrats outnumber Republicans by a lot in the early vote. Republicans generally go on the same day to the voting booth, whereas Democrats are more likely to vote early or vote via mail. Right now, they're pretty much neck on neck in now North Carolina, which is kind of unusual. Normally, there should be a much larger gap between Republicans and Democrats in the early vote, and it's not, which also shows you that voter enthusiasm in North Carolina among Republicans is higher than among Democrats. So that's the kind of stuff that we're watching when we look at the early vote. And every state has a different story. It's really strange. We're talking really about almost 50 different elections here when you go from state to state. But that's what we see in the early vote. So far, 17.5 million people have voted early. A lot of them by mail, but a lot of them also voted. They went to the polls already, which they can
And
ahead of
that
election
forget
day.
about 2020 because but I wonder what that 17, I wonder how that 17.5 million stands relative to say 2016.
Yeah, no, early voting has become much more popular. So, but we do know that about 55 million mail-in ballots have been requested, which is about 10 million less than in 2020. So that's where you are.
Next slide, Jose. So this is where you're just talking about this is the betting sites here.
No, this is the polling aggregates
Oh,
for the
that's the
state of
polls.
Michigan.
Okay.
So this is the spread between Trump and Kamala in Michigan. It shows they're pretty much neck and neck. And if you look at all the other, if you see some of the other charts, the thing is that the Democrats really have to have something of a 5 percentage point lead over the Republicans in order for them to win the Electoral College. They're probably going to win the popular vote, but a lot of that popular vote advantage is tied up in California and New York. So they really need to have a 5 percentage points lead on the Republican candidate. Right now, Harris is running about 2 percentage points above Trump. If you look at, for example, the polling average between Biden and Trump in 2020, or you look at the polling average between Hillary Clinton and Trump in 2016, you see how much Biden ran ahead by 7 percentage points. Hillary Clinton ran ahead by about three and a half, maybe 4 percentage points towards the end. And Hillary Clinton lost. right? Because she didn't have enough of an advantage in the national polls, and because she need to overcome that electoral
So
college
let's walk through
disadvantage.
that a little bit. So let's walk through that. So what is the difference if you compare this election to say 16 or 20? What are you seeing?
Yeah, so the spread between Trump and Hillary Clinton in the election polls at the end was 3.3 percentage points, right? So Hillary Clinton had 3.3 percentage
So she
more.
won by
No,
3.3%
no, no,
over
no, no.
Trump
This
in
is the
2006.
polls. This is the polls. So what
The
do
polling, okay.
voters say that they're going to vote for, right? So there were
Okay.
45.5% of the people that were polled said they're going to vote for Hillary Clinton, and 42 said they were going to vote for Trump. So there was a 3.3% percentage point spread between those two. So Hillary Clinton had a 3.3% advantage in the national polls nationwide, but that was not enough for her to win the electoral college, because a lot of that 3.3 percentage points, which were about 5 million votes, was either in New York or California. And it doesn't matter because they're going to go for the Democrats anyways. When you saw in 2020, there were 51% of the people said they're going to vote for Biden, and 44 they're going to vote for Trump. So
So you,
that was a 7.2% advantage for Joe
yeah,
Biden,
so
which
let's what so Biden was up 7%
seven
in
percentage
20
points. Yeah,
polling. Hillary
yeah,
was up 3. So your point is you want to see Kamala up 5 to 7% over Trump in the
yes,
polls nationally to neutralize the effect of the electoral college. That's what you're trying to say?
exactly. So
Okay.
unless we see Kamala Harris run away from Trump and get to 4, right? Because Hillary Clinton's 3.3% was not enough to get to 4, 4.5, 5% point gain. It's going to be really hard for her. I do want to say this, that since 2020, a lot of people have left blue states and they went to Colorado, they went to Nevada, they went to Texas, they went to New
Puerto
Mexico, they
Rico.
went to Arizona. Yeah, they moved. So this can influence the election. We don't know how much of that vote moved to Arizona and how important that is for the election. We don't know if, yeah, we know Florida. Florida is no longer probably not so much a toss-up state anymore. A lot of Republicans moved to Florida, but for states like North Carolina or for states like Georgia or states like Arizona, this could have made a difference. We don't know yet because it's the first election post COVID, where we are going to have to see how much of that exodus out of these blue states have had an influence on other toss-up states.
Okay, next one. And so
So
let's
these
get
are the
into the
stocks.
trades.
Yes.
What
So
you do the Kamala trades first and tell us, what's really happening with those trades now. Like what are the Kamala Harris trades telling us about her
okay, so it
probability?
is the Kamala Harris trades. For solar, actually, Barron's came out with a story echoing what Citibank was saying in an upgrade on First Solar today, saying that it doesn't really matter who wins because Kamala will basically expand or further the Inflation Reduction Act, which is really giving benefits to solar installations. But Trump may slap more tariffs on Chinese and imported solar from other countries. So First Solar is the only company that has U.S. solar manufacturing. But the trade is still seen as a Kamala trade. So First Solar has gone down. Then you have the hospital stocks. The Democrats, they are known for supporting and expanding assistance for healthcare, and that can help hospital stocks because hospitals have to pay for the non-insured. If anybody goes into the emergency room that doesn't have insurance, the hospitals are paying for that. So hospital stocks are seeing they're friendly to Kamala. They benefit from Kamala win. The defense stocks, I believe they will benefit from a Kamala win because Trump wants to end the war in Gaza and in the Ukraine. So that's just how it is. Ironically enough, the Democrats are now beneficial for companies like Lockheed and Raytheon.
Yeah, so
Uh,
Trump wants to Trump wants to stop the war efforts in both Ukraine and in the Middle East, and therefore, if Kamala continues the war effort in, say, the Ukraine for another year, that's more bullish for defense. I noticed today, cannabis is up a lot today, so this is a little bit wrong. It's been suffering, it's been going nowhere, but we got to actually just mention that it's up. And I have to make a few calls to figure out what's going on, but it's a
Well,
very
your client said it was because of Florida legislation. It's ramping ahead of Florida change in the regulation regarding cannabis. So that's a state issue. That's not a national issue.
Oh, but yeah, but that's interesting because because it's such a red state, if Florida goes positive on cannabis, to me that means more than other states because it's Florida. I mean, so that might be why it's having such an impact.
Oh yeah. Well, we discussed TAN already.
But to get into the whole interest rate, so TAN is like we showed earlier, is in a very nasty downturn, and you have to be fair. As interest rates go up, and we saw this in 22, the solar names are victims. Explain why, Rob. Why are they so sensitive to rates?
Well, the two things that this is why TAN is complex because number one, if interest rates go up, solar installation becomes more expensive, so less people install solar. And that is when I say people, don't always
And
talk
that's
about
the
how.
financing and what like so
Yeah,
if
the
you finance.
financing becomes more expensive. And that applies to utilities as well. So financing really plays a role here.
And,
Then
and
you
that's
then you
so that's why with higher rates, Kamala, and legislation to basically help pay for that. Is that so Kamala would actually help with the legislation potentially from the Kamala Harris administration would help ease the cost of that. And that's why.
Yeah, well, under the Inflation Reduction Act from Biden, they expanded subsidies for solar installation. So Kamala wants to advance that, and Trump wants to repeal part of the Inflation Reduction Act. That's why TAN would benefit from Kamala. Now, also TAN, that ETF has a lot of Chinese solar names in it, right? So if Trump gets elected, those Chinese solar names will suffer from additional tariffs. Whereas for Kamala, she's going to have a different, much less strict and how do you say that, non-discriminatory treatment of Chinese imports, right? Trump wants to slap tariffs on pretty much all the Chinese imports. So that is also a double benefit from Kamala winning over Trump for
That's a
10.
good point.
For USO, this is counterintuitive. It's like Trump wants to remove regulation on drilling, exploration, and natural gas LNG exports. That's what he wants to do. Kevin Hassett, the interview of which I just read, he's adamant about that. So if Trump does that, that's going to mean more domestic oil, which could weigh on oil prices, but it's very
Now get
beneficial
into that for a sec, right? Rob, a lot of people say, well, oil production in the United States had a record, but essentially in 2000, say right before 2020, the election, we were at 13.3 million barrels a day, right? And now we're up, maybe, was it 13.6? So we're up a little bit, but think about it, that's like 4 years. And historically, we should be up a lot more. In other words, if you look at the beginning of the Trump administration to the end, how many more barrels a day were we pumping relative to, can you explain that? Like the beginning of the Trump administration to the end, how many more barrels a day were we pumping versus the beginning of the Biden administration to today? That's important.
Yeah, no, the basically you stayed around 13. You ended the Trump administration at 13.3, and now you're at 13.5 million barrels a day.
I mean, think about it. That's insane. I mean, the population is up, global energy demand's up, and we've in 4 years, we're not really producing that much oil.
Well, you have much. Biden slapped a lot of regulation on the. He will argue no, but he did. He basically made a lot of offshore waters prohibited from onward to in Alaska. He imposed all this like the little bits and pieces of regulation, like for example, methane output restrictions. So that also impedes oil production. So it became harder and harder and harder to drill. And it became harder and harder for domestic energy companies to expand production. So that's why it took so long to get back. Remember, we went from 13 and a half to, I don't know, the output dropped to maybe 11 and a half million barrels during COVID. And it took forever to get back to where we are. Now, another thing that I believe Trump will do is he will slap tariffs on Iran, but he's done this before in 2018. But before he does that, he will ask the Saudis and the other Gulf states to pump more oil because he doesn't want to slap tariffs on Iran, limit or basically stop their export of oil, and then deal with much higher oil prices. So he will first ask the Saudis to pump more oil and then slap the tariffs on, or restrictions, embargoes, whatever you want to call it. So that is essentially the roadmap. So the increased production of the Saudis may not necessarily also benefit oil prices. Then eventually it may stabilize because you're taking Iran off the market. But that's why we believe that oil services stocks will benefit from Trump. And there's another thing that he basically posed, and I think will benefit Trump
So
as
oil
well.
service, that's OIH under Trump,
Right.
Schlumberger. Schlumberger's on the 200-week moving average. It's really been destroyed. So you're going to have, I want to remind people, you're going to have some tax loss pressure. We have a model that tracks it. We typically peak around November 15th for tax loss. It used to be years ago, used to be later in the year. But in years where this is very important, in years where you have lots of gains in the market, accountants and CPAs are calling high net worth investors today, and they're screaming, find me a tax loss. Because in years where you have big gains in the market's up big, those gains need to be offset. So in those types of years, that I think that's why the Schlumbergers, the Oxys, some of these energy names that are down, people are taking those tax losses, and then you can buy them back in 31 days. So for the next month, some of these Trump trades are actually deceptively cheap, I think, because of some tax loss selling. Because you think, Rob, if Trump's probability is really rising, why isn't Schlumberger's and OIH, why aren't they acting better?
Yeah, I think a lot of people might also think that it will take a while before these regulations come through, but apparently there's a House Reconciliation Committee that is already hard at work on day one
You
to
mean these
put back
deregulations, these deregulations?
reconciliation, the House Reconciliation
Yeah.
Committee, which basically deals with tax, but it's also dealing with deregulation. And that's also counting for the banks. Today, there was news that Fed he might not fire Powell, but he might fire Barr, which is the vice chair for regulation
So this would be
in the Fed.
Trump firing Barr?
Yes, because he doesn't want anything to do with the Basel III endgame. So this is an onerous piece of regulation that will be bestowed upon the banks.
It's regular.
If
You cut out there. I'm sorry. You regulation that what?
that will be imposed on the banks,
Yeah.
and that will basically impose another layer of reserves that they have to build as part of Basel III regulation. So under Kamala Harris, they see that a watered down Basel III endgame will be implemented by the end of 2025. And under Trump, they believe that it will be postponed indefinitely, which is also why Trump will want to get rid of Barr. So getting rid of that or postponing it indefinitely is a big boon for banks. That would basically free up like more than $200 billion of room core capital. So
And keep in
250
mind,
billion dollars of lending capital that they could do. So it's a positive for banks. Now the question is, how much is that already priced in? Probably some of it has already been priced in, but
yes,
can explain why stocks like J.P. Morgan and Wells Fargo have done so well. Wells Fargo probably next year under Trump is going to get rid of um, that regulatory cap as well they've been laboring under since 2016. So that's another boon for Wells Fargo, which it could allow them to increase their balance sheet by about 500 billion. right? Which means 5 billion on a return on assets of about 1.5% per year. That means $5 billion of extra profits for Wells Fargo if they can get rid of that cap that has been on this bank since, well, for almost 10 years. 10 years for fudging accounts. I understand it's an issue, but look what these banks did in 2008. Are we losing track here or something? Now, anyway, so one of the big beneficiaries of Trump win is Tesla, but also other car makers. This is not in the table, but Trump has said that he's going to make interest paid on auto loans tax deductible. Do you know what a boon that is for car sales? Right, car sales have been basically 2 million under potential for since 2021 for
And,
3 years.
Rob, so your point, so think of platinum and palladium, right? Think of catalytic converters, all this financing, these higher interest rates, like you said, have suppressed auto sales. Auto financing has been brutal. And so if Trump eases that cost on auto financing, at the same time, hybrids are really taking more market share over. One of the things we talk about in our book, When Markets Speak, Rob, is think of like where, say in 2020, where electric vehicles were supposed to be today versus
Right.
where hybrids are a lot further along. So this is what I'm hearing from some of the institutional accounts are buying the platinum and palladium trade, the PALL ETF, because if what you're saying is plausible, and there is some type of financing there, at the same time, there's this massive move into hybrids relative to EVs. That's a real bullish commodity story for platinum and palladium.
Right, but to me, the reason why Elon Musk has hitched his wagon to Trump is because he wants Trump to approve autonomous driving. Right, in China, that is already being done in many cities, and the United States is lagging. The Biden administration is not on speaking terms with Musk for a variety of reasons. So Musk is throwing so a lot of support behind Trump, and people are wondering why, and this is why. It's a $500 billion net present value for Tesla. This autonomous driving.
How's that? How do you get the 500 billion?
Well, you're basically discounting to the present the potential sales that could come from autonomous driving, right? So Tesla could have its own fleet. Tesla is basically the market leader. Even Waymo executives are admitting that Tesla is by far the largest, is ahead of everybody else when it comes to autonomous driving. You could have other car companies leasing or renting the Tesla database, right, in order to help them with autonomous driving. If autonomous driving gets approved in the United States, you can imagine, right, your car can basically become an asset that can make money for you because you're 95% of the time you don't use your car. So if autonomous driving, you just send your car and make Uber trips or deliver packages or what have you not. It can run for 20 hours straight. And that's the real moneymaker for Tesla. That's why the stock is trading at 57 times earnings, whereas Ford and GM are trading at 8 times earnings. It's because people are still pricing in part of this. And
And look at what's Tesla relative to Google and Apple and the rest of them. It's pretty expensive too, right?
So yeah, it's by far the most expensive Mag 7 or FANG, however you want to call it. It's one of the most expensive stocks in the S&P 500, if not the most expensive one. So a lot of it is priced in, but not all of it. Certainly not all of it. So it's a big, and then of course the auto loan tax deductions are coming on top of that as well. So that's the story with Tesla. What else? Bitcoin. Trump has positioned himself as the Bitcoin candidate. I don't know how that's going to. Maybe he makes the regulation more
And while
lenient.
you're there, get into the wolf, because you pounded the table on wolf and some of this creative. What I like is kind of the Bitcoin. If you're a Bitcoin miner, but you're also an energy play on artificial intelligence. But why were you so bullish on wolf? Like last 3-4 months, what did you see there?
Well,
That's
Bitcoin miners.
WULF.
Bitcoin miners have been separate, can be divided in those that are strictly Bitcoin mining and hold on for dear life, hodl. So they're basically holding on to those Bitcoins. Those are the Maras of this world or the Riots of this world. And then there are other group of Bitcoin miners who, in order for you to become a feasible Bitcoin miner, you have to be close to a cheap source of energy. Like, it could be a nuclear plant or could be hydroelectric, like a water dam or something like that, where the electricity costs are extremely low, because only then it makes sense to mine Bitcoin, because Bitcoin mining is so enormously expensive, especially after the halving that occurred, the halving of the Bitcoin that occurred in the summer. So you have these Bitcoin miners that figured out, well, wait a minute, we have all this cheap energy, we all have this enormous capacity, this data center capacity in order to mine Bitcoins. Why don't we open it up for hyperscalers, for the Googles of this world or the Amazons, in order for them to use some of the capacity for their data centers? So that
So a
is,
company like Wolf, WULF, what did you see like 3 or 4 or 5 months ago? What were
yeah,
you
well,
seeing?
Wolf has they're sitting close to a nuclear plant, so their energy costs are very cheap. And they have essentially I think since 2023, opened their doors for hyperscalers to use some of the capacity for AI data centers. So they're benefiting not only from Bitcoin, and now Bitcoin is going up. So they're not only benefiting from a rising Bitcoin price, but they're also benefiting from the boom in AI data center construction and expansion. And you see right now that even with the new scales of this world, which is a company that makes small modular nuclear generators, and Oklo and some of these other companies, some of which are really more profile stocks than they have a viable business yet. They've been soaring lately because the market realizes that the Googles of this world and the Amazons are essentially trying to go after each and every single one of the renewable energy sources. That could be solar, that could be wind, that could be nuclear, in order to run their data centers, because those data centers need such an enormous amount of energy. We're talking 1 gigawatt for some of the data
And
centers, which is
and
equivalent of one nuclear plant.
let me just remind people. So I'm proud of you and our team. We have pounded the table in the uranium space for 3 or 4 years. We did trade alerts on URNM um, and NewScale, which is SMR, in August. So what we do is we've owned these positions for years, but we took a new position in SMR in August in trade alerts that go up. So if you want to be on our trade alerts, if you want to be in our chat room with institutional investors, reach out to Tatiana at thebeartrapsreport.com, Tatiana at thebeartrapsreport.com. Come to our website. But we have a Discord chat with professional investors around the world, gathering intelligence there. We've got trade alerts. But Rob, like like when you issued that trade alert on SMR, NewScale, in August, that went out, via WhatsApp. What's the thinking there with NewScale? Is it around, because is it around like, okay, if Larry Ellison's doing this, Microsoft's doing, are we going to see Meta? Are we going to see, in other words, is this a road to maybe Meta and other players doing the same kind of their own energy sources to support AI?
Right. And it's very hard for large scale utilities to build a new nuclear plant. It takes forever. So much better to deploy small scale modular devices in order to attach them to your data center than rely on the mainstream baseload utilities to build a new nuclear plant, because that will take a long time. Now, they have been taking some of these nuclear plants out of their mothballs, like 3 Mile Island, right, for Microsoft, but it will still take a long time. So, and there's clearly not enough capacity available. So now the big data center companies are all fighting for capacity. And this is one of the reasons why merchant utilities like the Constellations and the NRJs have been rallying so much this year, because the merchant companies, right, the merchant utilities, they provide essentially power if the baseload utilities do not have extra capacity anymore. Let's say at 8 o'clock at night, the baseload utility in the middle of the winter, the baseload utility is table max, and then the merchant comes in and they provide that additional power. So the gearing, the leverage on the merchants for this data center boom is much higher than on the traditional base load utility company like Southern or Con Edison or something
Yes.
like that.
And that's why the XLU is trading. It's never been this high above its 200-day moving average. It's the highest percentage above the 200-day that we've ever seen. And I'm talking about over the last month. So you're talking about extreme overbought. So this trade is, what you want to do is create a, what we did at the Bear Trap support is you create a wish list of these stocks. And then when you have an event like August 5th, we issued the most trade alerts that week that we have all year. So a lot of these names that we're talking about have moved violently upwards, but you always remember, you want to have a wish list. And when you get a move down in the market, that's when you put some of the money to work. Rob, I think that's pretty much it. Is there anything else that we missed that you want to cover?
No, I think this is pretty yeah. I think the important part is that not only who wins the election, but can he or she take the Senate and the House with them. And then
So if you're watching election night and Kamala Harris wins and she doesn't have the House and Senate, you want to be starting to think about a real fiscal cliff, potential austerity, maybe think about bonds, right? Because if Kamala Harris wins without the House and Senate, it's a totally different game for bonds, because that means massive austerity, spending cuts. And so you want to have these trades. Like you said, if Trump wins and he has the House and Senate, then you're talking about a real steepener, right? You're talking about higher bond yields, real potential growth, deregulation, and a much higher interest rate regime, in that kind of growth.
yeah. And let's see what he has to say. Remember on election night in 2016, everybody was fearful that Trump would unleash like some sort of trade war on the world. And then he came on stage at 3 a.m. in the morning and he said he was talking about infrastructure and he was talking about a reconciliatory speech. And then the market started rallying and they never stopped rallying. So if Trump wins and his speech is very antagonistic towards China, then that he's itching to start a trade war there. That's not, what the market wants to hear. The market probably wants to hear that, he wants to cut taxes, corporate taxes from 21 to 15%. That's the kind of language you want to hear. Extending the tax cuts of 2017, that kind of language. That's what the market wants to hear. Then you're going to have a growth spurt, cyclical, Russell 2000 stocks, small cap banks. Those will be the ones that'll be benefiting. In a trade war, a lot of trade friction. That's not that's going to be a very different setup. So I think,
and that's where one of the things we talk about in our book, When Markets Speak, is like, if you think about the level of protectionism, so Trump brought forward protectionism in 2016. The Democrats saw how Trump resonated with the middle class America, union people. It's a fact. And Democrats very wisely embraced reshoring and a lot of the Trump tariffs, not all of them. And now what's interesting is now Trump has to ramp up. This is what I see. Trump has to ramp up his protectionism because the Democrats already embraced half his plan, right? So the bottom line is a much more inflationary world. Labor unions more powerful than ever, right? You've got this labor strike at the ports that comes back in January. I know this labor strike at Boeing just settled, but much higher wages there. So you've got power of labor, you've got reshoring, you've got deficits, a much higher interest rate regime. Right now, you still have 23 trillion in the NASDAQ 100 versus the energy sector's 2.8 trillion. So there's 23 trillion in the NASDAQ 100 versus 2.8 trillion in the energy sector. 10 years ago today, there was 4 trillion in the NASDAQ 100 and 3.4 trillion in the energy sector. So those two are almost the same size. Now, the NASDAQ 100, like I said, is 23 trillion and energy is down at 2.8 trillion. So you're substantially larger, like it's $18 trillion larger in the NASDAQ 100 than you were 10 years ago. And the point we make in the book is that this is like let's say a 2010 to 2020 portfolio that's disinflation growth stocks. And it's clear we're moving much toward a 1968 to 81 portfolio, hard assets. And we should see a major regime shift toward a different type of portfolio in this whole new world of higher interest rates, higher inflation, protectionism, multipolar world, obviously tension in the Middle East and in the Ukraine, it's also supporting inflation, right? So thanks a lot. It's When Market Speaks, how to listen when markets speak. I appreciate, Rob, everything you did, on the book, and pick up a copy today and join us on the Discord platform. It's Tatiana at thebeartrapsreport.com. Join us live behind me on the Bloomberg platform if you're an institutional investor. Thanks a lot. Have a great day, and we appreciate you joining us.